All right, let's talk about Bitcoin. You think you know it, right? The crazy highs, the crushing lows. We've all seen the headlines. But here's the thing. What if I told you that's all old news? That the Bitcoin market we have today has completely, and I mean fundamentally, changed forever. We're going to dig into the data and show you that it's a totally different animal now.
You know, it all started so simply, with this one almost ridiculously understated quote from its creator, Satoshi Nakamoto. It might make sense to get some in case it catches on. Can you believe that? In case it catches on. It was just this little experiment, an idea floating around on old internet forums. That's where it all began. Well, that little seed, it's grown into something that Satoshi probably couldn't even have imagined. And that's really the heart of what we're talking about today. The market has hit this major checkpoint. Everything about it, how it moves, who's buying it, the tools they're using, it's all been transformed. Seriously, this is not your older brother's Bitcoin.
So let's get into the first big change, and it's all about the rhythm of the market. The crazy, chaotic roller coaster rides of the past, they've been replaced by something, well, something a lot more structured. And that brings us to this new era of what we're calling chopsolidation. It's a bit of a mouthful, but the idea is simple. Picture this. After a huge climb up a mountain, instead of just falling back down, the market sets up a new base camp. It hangs out there for a while, moving sideways in this choppy but kind of stable range. And during this time, a ton of Bitcoin is changing hands. It's like the market is taking a breath and everyone's agreeing, yep, this new price, this is where we live now. It's a huge sign that the market is growing up. And man, when you put the then versus the now side by side, it's just night and day. The Wild West days, that was all about these mind-blowing rallies straight up, followed by these absolutely soul-crushing crashes. The new normal? It's more like a structured climb, taking it one step at a time. The dips aren't nearly as deep, and the volatility, it's actually at historic lows. Wild, right? And look, the numbers back this up completely. In the old bull runs, you'd see these massive, terrifying pullbacks. But in this latest cycle, the biggest drop we've seen is around 32%. Now that's still a drop, but it is the shallowest major correction we've ever had in a bull market. And that tells you something really important. This market is being driven by people actually buying and holding Bitcoin, not just gamblers using a ton of risky leverage. Okay, so that's the how. Now let's talk about the who, because this new price behavior isn't just happening on its own. It's being driven by a whole new class of investors. So the big question is, who's actually buying up all this Bitcoin? And when you look at who owns what, the picture has totally changed. Sure, the long-term holders, the true believers, they're still the foundation, holding almost 80%. But look at the new players on the scene. You've got ETFs holding a huge 7.4% slice, public and private companies with another 7%. Even governments are in the game now, holding over 2.5%. We're talking about massive, stable, institutional players here. This isn't just a retail phenomenon anymore. And the amount of money flowing in, it's just staggering. I'm going to show you a number, $1 trillion. But what does that number even mean? It's not what you think. See, that's not the market cap. That is something way more important, the realized cap. Think of it as the total amount of actual money that every single person has ever invested to buy their Bitcoin. It's the collective skin in the game. It's the trust, the savings that people have put into this network. And for that number to cross $1 trillion, wow, that is a massive, massive vote of confidence. And the moment Wall Street finally showed up, it wasn't a gentle knock on the door. It was more like they blew the doors off the hinges. $4.6 billion. That's how much was traded on day one of the US spot ETFs. Just incredible. And this ETF launch, it didn't just break crypto records, it smashed records for the entire financial world. We're talking total assets in these ETFs rocketing past $150 billion. The inflows crushed the previous record for any ETF launch, ever. And then there's BlackRock's IBIT. It became the fastest ETF in history to hit $50 billion in assets. This wasn't just big for crypto, this was a historic event for finance, period. So that brings us to the final piece of the puzzle. It's not just about who is buying, it's about how they're trading it. And let me tell you, the new ways are incredibly sophisticated. Wall Street has found its new favorite playground, and the games they're playing are changing Bitcoin's entire personality.
The really big change here is the shift from a futures-driven market to an options-driven one. Now, the old futures market was basically a casino. It was all about pure speculation on price, using insane amounts of leverage, and it was often backed by other crypto, which made it super fragile. The new game? It's all about options. This is a much more complex, professional game. It's focused on capturing volatility and running smart strategies, and it's all backed by good old-fashioned cash. And just to give you an idea of how big this new market is, the total value of all open Bitcoin options contracts recently hit an all-time high of $92 billion. This isn't some small niche corner of the market anymore. This is a full-blown financial giant. And you can see the cause and effect so clearly on this timeline. BlackRock's iBet ETF started off strong, for sure. But the second that options trading for it went live, boom. Its market dominance just went into hyperdrive, skyrocketing to over 57%. This is the proof. The big money isn't just buying and holding. They're actively using these complex tools to trade around their positions. So what's the bottom line here? All these new fancy financial tools are essentially letting Wall Street tame Bitcoin. They're building these complex strategies that actually make money from the volatility. And in the process of doing that, they're squashing the volatility down. It's a fascinating feedback loop. Which leads us to the big question at the end of all this. With all these massive changes, the price, the players, the tools, have we finally seen the taming of Bitcoin? So let's just quickly recap the whole transformation. Price-wise, we went from Wild West swings to stable chop solidification. The players? We've gone from everyday speculators to global institutions. The tools? We've moved from simple, risky leverage to highly sophisticated options. And what's the result of all that? A market that's way more mature, more resilient, and driven by actual buyers. I mean, every single piece of data we've looked at today, whether it's the price charts, the money flowing in, or the derivatives market, it all points in the same direction. A grown-up, institutional-grade Bitcoin has finally arrived. But just when you think you have it all figured out, there's a catch. And the source material for this explainer puts it perfectly. Bitcoin has this one very special talent. Just when traders get complacent, just when they think they've finally tamed that wild horse, it has a tendency to take them out to the woodshed. And that's the thought I want to leave you with. Has Wall Street, with all its money and all its fancy tools, really tamed Bitcoin for good? Or is this newfound calm just the quiet before the storm? Is the market just being lulled to sleep right before Bitcoin makes its next absolutely legendary move? All the data points to a new, stable era. But if there's one thing Bitcoin's history has taught us, it's to never, ever get too comfortable.